Can you imagine earning $1,000 a month without lifting a finger? It's not magic, it's not a scam, and it's definitely not luck either. It's the power of dividends, one of the most underrated and effective ways to generate passive income. Today we'll not only tell you how it's possible to do it, but we'll also mention the 8 stocks that currently pay month after month, almost as if it were a second salary. Did you know that some companies not only allow you to invest in their growth, but they reward you directly for doing so? And the best part, these stocks don't depend on passing fads. We're talking about solid companies, giants in their industry, that have proven for years, and in some cases, decades, that they know how to take care of their shareholders. But the interesting thing is, not all dividend stocks are created equal. Some barely give you a few dollars a year, while others can literally cover your bills or fund your vacation. The key is to choose wisely, and that's where many fail. Ready to find out? What are dividend stocks, and why are they important? Before we dive into the list of the best dividend stocks, it's important to understand what they are and why they're so valuable. Dividend stocks belong to companies that distribute a portion of their profits directly to shareholders in the form of regular payments, known as dividends. This system allows investors not only to earn from the increase in the value of the shares, but also to earn a steady stream of income, regardless of market movements. What makes them especially attractive is their ability to generate reliable passive income. Unlike riskier or more volatile investment strategies, dividend stocks typically belong to established companies with solid business models that have proven their ability to generate profits even in times of economic uncertainty. In addition, dividends can be reinvested to purchase more shares, which activates the power of compound interest. This means that over time, not only the income generated grows, but also the total value of the portfolio, creating a virtuous cycle of wealth accumulation. For these reasons, dividend stocks are considered a key tool for those seeking financial independence or extra income to achieve their goals. Now, let's look at those companies that stand out for providing a good dividend to their shareholders. 1. Johnson & Johnson. Johnson & Johnson is one of those companies that has proven to be reliable time and time again in the market. With a current dividend yield of 3.23% and a solid presence in the healthcare industry, has been increasing its dividends for over 60 years, and that is not something you see every day. Even when the economy has been going through tough times, it has maintained its payouts, making it a very attractive option for those looking for stable passive income. What's impressive about Johnson & Johnson is that its business model is highly diversified. It's not just based on one product or service, but spans areas such as pharmaceuticals, medical devices, and consumer products, which gives it an advantage in terms of stability. The healthcare industry is one of the most in demand globally, and it ensures that the company's revenue remains strong and consistent over time. Additionally, the company has a fairly low level of debt compared to many of its competitors, giving it a strong and secure financial position. This, combined with its consistent dividend yield, makes Johnson & Johnson an excellent choice for those looking for reliable and sustainable passive income over the long term. 2. Procter & Gamble. Procter & Gamble is a true giant in the consumer goods industry, and it's not hard to understand why. Its catalog is full of basic products that people use every day: detergents, shampoos, toilet paper, cleaning supplies, things that you can't stop buying, even in the worst economic times. That constant demand gives the company a very stable revenue base. With a current dividend yield of 2.27%, Procter & Gamble offers a solid stream of passive income. But what really makes it stand out is its impressive track record: 67 consecutive years of increasing its dividends. Not many companies can say they have achieved this, and even less so in such a competitive market. This record speaks not only to the strength of its business, but also to its commitment to shareholders. As long as people continue to wash clothes and take care of their personal hygiene, Procter & Gamble will continue to be an unbeatable force in the market and an ally in any diversified portfolio. If you find this content useful, remember to give it a like and subscribe to the channel so you don't miss the next videos. Let's continue. 3. Realty Income. Realty Income is a name that stands out in the real estate industry, and not by chance. With a current dividend yield of 5.64%, this company is famous for being the monthly dividend company. meaning it pays out dividends every month instead of every quarter. For those looking for a steady stream of passive income, it's a hard option to beat. The formula for its success lies in its model as a real estate investment trust, or REIT. Essentially, Realty Income owns and leases commercial properties, generating solid, predictable income. Most of its leases are long-term and with extremely reliable companies like Walmart and Walgreens. The best thing about Realty Income is its consistency. Monthly payouts are ideal for those who want regular income or prefer to reinvest quickly. Plus, its track record of dividend increases reinforces its commitment to shareholders. If you're looking for an investment that combines stability, generous payouts, and a solid industry like real estate, Realty Income should be among your top choices. 4. Coca-Cola. Coca-Cola is one of those brands that virtually everyone knows. With a current dividend yield of 3%, this beverage giant is not only one of the most iconic companies on the planet, but also one of the most trusted for investors looking for stable passive income. Coca-Cola's trick is in its business model. It sells something that people consume every day all over the world. It doesn't matter if it's a can of soda, water, juice, or even tea. The company has a product portfolio that dominates global markets. This ensures it a steady income, which translates into regular dividends for its shareholders. Did you know that Coca-Cola has been increasing its dividend for 61 consecutive years? That's no accident. The company has such a strong position in the beverage industry that it can weather economic downturns and still turn a profit. Plus, its profit margins are huge, since soda costs little to produce compared to the price it sells for. Coca-Cola is not only a brand that everyone loves, but also an investment that pays off. This is a stock that definitely deserves to be in any well-structured portfolio. 5. Verizon. Verizon is one of the heavyweights in the telecommunications industry, and it's not hard to see why. With a current dividend yield of 6.18%, this company has earned its place as a favorite for those looking for solid passive income. Verizon's business is everywhere, from mobile services to high-speed internet. In a world where everything is connected, the demand for what they offer is only going to increase. Even in tough economic times, people still need their phones and your internet connection, making Verizon a resilient business. The best part? Their earnings are stable and predictable, allowing them to maintain those attractive dividend payments. Plus, Verizon has shown a solid commitment to shareholders by prioritizing consistent returns year after year. If you're building a portfolio that generates reliable passive income, Verizon is an option you can't overlook. Its mix of stability, high yield, and dominant market position makes it a smart bet for any investor. 6. Kinder Morgan. Kinder Morgan is one of the big players in the energy industry, and its current dividend yield of 4.19% makes it a very attractive option. The company is dedicated to the transportation and storage of natural gas, oil, and derived products, which places it in a key position within the energy sector. The interesting thing about Kinder Morgan is that despite the volatility of the energy markets, it remains a solid company. Demand for energy is not going away, and the transportation and storage of these essential resources remains a necessity. This gives companies like Kinder Morgan an advantage, as their revenues are not dependent on daily fluctuations in commodity prices, but on long-term contracts and the flow of demand. In addition, Kinder Morgan has a long track record of paying generous dividends. Their business model allows them to maintain high levels of returns without sacrificing financial stability. 7. Exxon Mobile. Exxon Mobile is one of the biggest giants in the oil industry, and with good reason. With a current dividend yield of 3.37%, this company is one of the best known in the oil sector. Although the oil market is cyclical, Exxon has demonstrated its ability to remain profitable and pay dividends even during oil price declines. What really stands out about Exxon Mobil is its track record. It has consistently increased its dividend over the years. This shows that despite the ups and downs, Exxon knows how to manage its cash flow effectively to reward its shareholders. If you want an energy stock with high dividends and a good payment history, Exxon Mobil is an excellent choice. In a world where energy demand continues to grow, this company continues to adapt, investing in sustainable projects and maintaining its profitability. 8. Brookfield Renewable Corporation. Brookfield Renewable Corporation is a top choice for those looking to invest in clean, renewable energy, offering a dividend yield of 4.48%. This company specializes in generating energy from renewable sources such as solar, wind, and hydroelectric, which places it in a privileged position in the energy sector, especially in a world that increasingly prioritizes sustainability. Demand for renewable energy will continue to increase over the years. This means that they are not only generating stable income, but also long-term income because the transition to clean energy is in full swing. In addition, Brookfield has a broad portfolio of assets across various geographies, allowing them to diversify their revenue streams. Another reason this company stands out is its dividend policy. Brookfield Renewable has a yield that outperforms many other traditional companies in the energy sector. If you are looking for a good dividend and at the same time want to invest in something with a positive impact on the planet, Brookfield Renewable is a perfect option. Dividend stocks are one of the most effective tools for building long-term wealth. The most important thing is to get started early, even if you have little capital. Over time, and with reinvestment of dividends, you can turn a small investment into a significant source of income. Which of these companies do you find most interesting? Have you already invested in any of them? Tell us in the comments. If you like today's content, remember to give it a like and subscribe to the channel so you don't miss our next videos. See you later.